under GST. So some of us may be wondering, what is this cross charge? If you put a control F in the CGST Act or in the CGST rules for the word cross charge, you will not get this word at all, because there is no such word in the statute. But still, this is a very important concept, and this is going to be a major litigation factor in the days to come. Like during our service tax period, we had this outward freight transportation, whether credit is eligible or not. So every other associate will have a show cause notice and periodical show cause notices on that issue. So similarly, this cross charge is also going to be another area where the disputes are going to be very, very, very widespread, because the concept itself is yet to be understood properly by everyone, and many of the associates are not following it. It's a fact. So we will just go through what is this cross charge all about, how is it applicable, what is its impact, everything we will just run through this session. So in between, if you want to ask any important question, you can just raise your hand in the app. But please reserve your questions for the question and answer session. But still, if you want to urgently raise anything, you can raise the hand and admin will take care of it. So raising the hand through this app, because many new people have joined it today, I'm just explaining the procedure. So now, this cross charge, what is this cross charge all about? We may be knowing that many of the companies will have multi-locational presence. They will have factories in more than one state. They may have depots in more than one state. They will have warehouses in many places. So like that, multi-locational presence is always there. It may be either due to a commercial necessity, like suppose if my market is spread out my entire country, I should have my stock point at every point of time. Otherwise, moving the goods, logistics, timing and all will be difficult. So I should have my stock points at every other location. So which is a commercial necessity. Sometimes what will happen, my customer may be in a particular place and just-in-time concept, like automobile, Maruti, they will be placing the order and immediately I have to supply the goods. So I have to keep the goods near the location of my supplier. So I will be forced to open. Is my audio clear? I'm getting some chat messages.
Sir, it is clear, sir, but a little bit more. Sir. It is clear. Yes, sir.
Okay. So now, either because of commercial necessity, we will be having a multi-locational presence. Sometimes to avoid the GST liability also, see, if you are stock transferring if you are selling the goods in another state, it will be a GST transaction where no ITC is eligible. So what people used to do, we will open a depot in another state. We will stock transfer to the depot without payment of any GST, and from there it will be a local sale, so that the GST burden can be avoided. So there were a lot of litigations, whether the buyer is known or buyer is not known, what is the consequences and all was going on for a long time. So multi-locational presence is a commercial necessity. Now, what are the registration requirements under the different laws? If you take central excise, the central excise, it is a separate registration. If we have separate factories, we have to have separate registration. There was a LUT to a limited extent, but otherwise, central excise, every factory or every depot which want to pass on the credit, they need a separate registration. That is under central excise law. Under VAT law, in each state, we are supposed to have a registration. So VAT law also followed. Each state, we were supposed to have a registration. In service tax, we had the centralized registration facility. In service tax law, we had the centralized registration for the entire country. We can have one registration that is possible. But if you see GST law, for every state, we should have a separate registration. There is no concept of centralized registration under the GST law. So every state, we should have a separate registration. Within the state, if we want to have more registrations, it is possible. They have allowed last year. See, for example, BHEL, they have factories in Trichy, Ronipet, in some other places. For various reasons, they want to have separate registration. It is possible. So within the state also, taking separate registration for separate premises is possible. It is optional. Whereas if you have a presence in a different state, definitely we should have a separate registration in each state. So every state GST registration is a must if you are having operations in the particular state. So these are all the registration requirements both under the old law, under the new law. Now, coming to the taxable event in GST, we all know that the taxable event in GST is supply. We had 2-3 sessions on supply by Mr. Raghavan Ramabhadran. So he has clearly told, we have also gone through the definition of supply under section 7(1)(a), which says supply includes all forms of supply such as sale, transfer, barter, exchange, license, rental, lease, disposal, agreed to be made for a consideration. So the point to be noted for our purpose today is the supply should be for a consideration. There are some exceptions, we will come to that, but to become a supply, there should be a consideration. If there is no consideration, a transaction will not qualify as a supply. So consideration is a must. So now we will take an example. So what happens? There is a factory in state A. An associate is having a factory in state A. He has a warehouse in state B. So from the warehouse in state B, he is selling the goods to the consumers. So what will happen? The product is liable to GST. Let us assume the product is liable to GST. So the person is eligible to take ITC. So at the manufacturing place, that is state A, he will be taking input tax credit. But when he transfers all the goods to the warehouses, whether the warehouse in or any other state, it will not become a supply for the time being. It will not become a supply because it is his own warehouse. The warehouse is not going to make any payment. So it will not qualify as a supply in the general sense. So there will not be any GST liability. So the ITC, nothing can be done. The ITC will accumulate at the factory level. Now, from the warehouse, when the goods are sold to dealers or consumers, it is a supply because there is a consideration, there is a sale. So GST is payable by the warehouse. But the ITC will be at the factory level, and warehouse, when we are going to pay that, be any ITC. So the ITC chain is broken. So we can't say, because any law, be it taxation law or any other law, the law has to fall in line with the business practices. We can't tell, no, under GST law, you should not have branches. So the law has to be aligned to the business practices. So going by the general definition of supply, this particular transaction between factory A to warehouse, it may not qualify as a supply because there is no consideration. Prithvi, I am not seeing the chats. If you are getting any important chats, you please tell me. Prithvi?
Yes, sir. Till now, nothing has come, sir. I can let you know,
okay.
Sir.
Okay. So now, when the transaction is between the same entity is covered by the same PAN number. If they have a multi-locational presence, if goods are transferred from one place to other place within the same entity, it will not qualify as a supply. There will be no GST payment required. So this will break the ITC chain. So this problem has to be somehow overcome. So how the problem can be overcome? So the GST law has adopted a 3-pronged strategy. So what they did in the definition of supply under section 7, under subsection 1 clause C, they said supply includes activities specified in schedule 1 made or agreed to be made without consideration. That is on schedule 1 to the act. There they have listed out certain transactions. So such transactions, even though if they are carried out without any consideration, still it will be deemed as a supply. So we should see what is there in. So if we go to schedule 1, serial number 2 of schedule 1, it says supply of goods or services. Please note, supply of goods or services or both between related persons or between distinct persons as specified in section 25 when made in the course or in furtherance of business. So two terms are important: related persons, distinct person. Related person, we know section 15 defines who are all related persons. We will not go into it for the time being. So if there is any supply of goods between distinct persons, even though there is no consideration for it, as per schedule 1, it will be a supply. So now it becomes necessary. to understand who is such distinct person. So for that, we have to go to section 25. Under section 25, subsection 4, a person who has obtained or is required to obtain more than one registration, whether in one state or union territory or more than one state or union territory, shall, in respect of each such registration, be treated as a distinct person. Say, for example, I have a factory in Tamil Nadu. I have my depot in the state of Karnataka. So from I have to take registration both in Tamil Nadu as well as Karnataka. Once I take the registration in two places, these two entities, two registrations will be treated as a distinct person. Under GST, they will be treated as a distinct person under section 25. Similarly, even within the state also, suppose I am taking 2-3 registration. I have 2-3 locations in my state. I want separate registration. I have taken separate registration. So each registration will be treated as a distinct person. So this is what section 25(4) says. And any transaction between such distinct persons, even though it is without any consideration, it will be deemed as a supply under schedule 2. So that is how the problem, the ITC chain which is not being completed, that problem has been overcome under GST law by this three-pronged strategy. The first one, the definition of supply says, even though if it is made without consideration, the transaction in schedule 1 will become a supply. So what does that schedule 1 says? One of the entry in schedule 1 says the supply between distinct person will be a supply even though there is no consideration. And who is the distinct person? If a person has got more than one GST registration in same state or in different state, they are treated as distinct person for the purpose of GST law. So now, what happens because of this? Because of this deeming fiction, there are two consequences. One is when goods are moving from one distinct person to another distinct person, that is stock transfer. So I have a factory in Tamil Nadu. I stock transfer to my depot in Karnataka or Telangana, wherever it is. So that becomes a supply. I am liable to pay the tax, GST, no problem. Otherwise, if I am not supposed to pay the tax for that particular transaction, it will not qualify as a supply. ITC problem will arise. ITC will get accumulated. So I'm happy. I'm happy about this particular amendment because stock transfers are liable to GST. Otherwise, it will lead to breakage of the ITC chain. So it is a positive factor. But unfortunately, what happens? Supply of services between such distinct persons is also covered. So if you go back to schedule 1, that entry reads supply of goods or services or both between distinct person. So as far as goods are concerned, I don't have any problem. Whenever one branch transfers goods to another branch, I am ready to pay the GST. No problem, no complications at all. But when it comes to the question of providing services by one distinct person to other distinct person, that also becomes a supply. Even though there is no consideration, providing service by one registration, one distinct person to another registration or another distinct person also becomes a supply which is liable to GST. This is what is creating problem. So this is the area where we will be having lot of issues. So this is where the cross charge issue is coming into picture. Now, before we proceed with the GST implications, let us just understand certain business practices. So accounting wise, and even as per the accounting standards, so many of the companies, what happens? There is something called cost apportionment. A company may be having its registered office, a head office in one particular place. That head office will be doing common. They are all common. They cater to the requirements of all factories and all registrations. It's a common. And the cost of that particular headquarters, any expenditure incurred in the headquarters, it will be apportioned to all the factories. I'll give an example. There is a multi-locational factory, an automobile component manufacturer. He has 5 factories in 5 states. And his headquarters is situated at Chennai. So the headquarters is taking care of all marketing, such important functions, policies, everything is taken care of by the head office. So there will be a cost incurred in the head office. It may be there in a rented building. There are sort of employees working in the head office. So all these expenditures will be apportioned to all the individual units. Then only we can find out the profitability. So otherwise, if you want to know the profitability of each and every branch, then the common cost has to be apportioned to all the units. This is an accounting requirement prescribed under the Indian accounting standard. So this is being followed by many large concerns. A small concern may not do it, but many of the large organizations, they will be doing the cost apportionment. Even before GST, this was being done. So all common expenses will be apportioned on some basis, based on turnover or based on number of employees. So they can follow any rational method and apportion the cost of headquarters or common cost among all the units. This is a basic commercial requirement. But if you see the profit and loss account or the balance sheet of the company, that will be common. They may not be preparing individual balance sheet and individual P&L account. Everything will be consolidated, and for the company as a whole, a single P&L account and a single balance sheet will be prepared. But this cost apportionment is, before coming to GST, this cost apportionment is a necessary requirement which is being followed by all the units. So now what happens? Because service provided by one distinct person to another distinct person is also deemed as a supply. See, when we do the cost apportionment, there will be no payment involved. Suppose my headquarters has incurred 10 lakhs expenditure. I have 5 factories. I distribute 2 lakh, 2 lakh, 2 lakh. And the factory will not pay 2 lakhs to headquarters. There will be no monetary involvement. There is no turnover in this regard. It is only for accounting purposes. But under GST law, whether this will become a service, whether the headquarters has provided any service to the branches. So that becomes an important question. Similarly, a lot of employees are working in the headquarters. They are working commonly for the company. So all the units are getting the benefit of the employees of the headquarters, whether the headquarters is providing any service to the branches. So that becomes important question. We have to answer that. Next, the headquarters, it may have its own resources, its own computer, its own software, its own employees, which are used commonly by all the units. It may also happen the headquarters may procure services from outside. It will appoint a chartered accountant to audit the accounts of the entire company. It will appoint a marketing consultant for the entire company. It will hire a building for its own offices. They may take a building on hire. So these are all the services received by the headquarters, but the benefit of the services are enjoyed by all the units. So the benefit flows to all the units. So what is happening here? Is there any procurement of services by the headquarters for all the units? So then it becomes a supply transaction. What is the GST liability? So these are all the problems which we have to encounter. So then once it becomes a supply of service, how to value it? There is no value. We are not charging anything. It is only a question of apportionment. So how to value it? Whether invoice has to be raised. So these are all the issues. This is what we call it as cross charge. As I said, cross charge is not a statutory term. You will not find this term either in the act or in the rules. It's basically an accounting term. So the term cross charge as such means apportioning the expenditure, apportioning the common expenditure among different segments of a business entity. So when it is applied to GST, so now we have to see whether such an apportionment will amount to providing supply of service by headquarters to other unit or even between the units also. So both goods as well as services, it is possible. So as I said, this has been created, this particular legal fiction has been created to overcome the ITC chain. So as far as goods are concerned, there is no problem. Whenever there is any transfer of goods from one location to other location, even though it is deemed as a supply, GST can be paid. There is no problem over it. But the problem comes only when it comes to the question of services. So now we will see how to deal with this. Before that, we should also understand another important term, which is called input service distributor. This concept was there even under the old law. From 2004 Senvat Credit Rules onwards, there is a concept of input service distributor. So an input service distributor means a headquarters or a registered office or any office where common input services are received. So before coming to cross charge, GST and all that, we will first understand what is the concept of ISD, Input Service Distributor. This was there even in the old regime as well as in the new regime. Under GST also, the concept of ISD continues. So the role of ISD, that is Input Service Distributor, is suppose the headquarters has appointed a chartered accountant to audit the accounts of the entire company. The auditor gives a bill with the service tax, and that service tax credit has to be distributed to all the units. The headquarters cannot take the credit. The headquarters, if they take the credit, the headquarters may not be supplying any goods. They may not be a manufacturer. They cannot pay any tax out of it. So they cannot use the ITC. So that common services, whatever are received by the headquarters or registered office, has to be distributed to all the factories. This is as far as a manufacturer is concerned. The same principle will apply to a service provider also. Let us say a software company is there. They have presence in 4 or 5 states. There is one central office or a registered office or a corporate office. Whatever input service invoices received by the head office or corporate office, that ITC, the service tax on that particular invoice, has to be distributed to all registration. If they have opted for centralized registration, ISD is not required. But if individual registrations are obtained under the service tax law, the credit of headquarters has to be distributed. On what basis? Based on the turnover. So what is the turnover of each of the branches? Based on that, the credit has to be distributed. This is called ISD. The same ISD principle is available under GST law also. So the GST law also defines an input service distributor similar to its definition under the service tax law. So now let us take the case. There is a GST registration, head office. The head office is functioning in a rented building. The head office is functioning in a rented building. Now that landowner, that building owner gives a GST invoice. So GST law says the headquarters is catering to all the branches. So it becomes a common service. So the credit cannot be retained only at the headquarters level. It has to be distributed. If we follow the model of input service distributor, it has to be distributed. I will give another example. For all the factories, for the headquarters, a common security agency is appointed by the headquarters. That security agency is giving services. Security guards are posted in all the places, all factory, depot, head office, everywhere. The security agency is deploying the employees. Now the security agency gives a separate bill, a common bill to the headquarters. The headquarters cannot take the full ITC. The headquarters has to distribute that particular ITC through ISD mechanism. It can also be viewed in another way. So it can also be viewed like the headquarters has facilitated a building for the benefit of the branches. So this may look a little odd. We will take the example of the security guard. So when the security agency is giving a single bill to the headquarters, it can be treated both ways. Either we can call it as an ISD, that credit will be taken in headquarters, it will be distributed through ITC. It will not be a supply transaction, mere distribution transaction, for which we have to take one separate registration as an ISD. A separate return has to be filed. That is one route available. At the same time, it can also be presumed the headquarters has arranged security service through an agency, because anything done or agreed to be done is also a supply. So the headquarters has arranged, has facilitated supply of security to the headquarters. Is a supply of service. So a same transaction, it may either fall under an ISD route or it may come under this cross charge mechanism. So this is a problem which is being faced by all of us. So now we determine which transactions can be taken through the ISD route, which transactions we can follow the cross charge for the purpose of GST. So for accounting cross charge, everything has to be distributed. Under accounting, all common expenditure has to be distributed, apportioned among all the units. When it comes to the question of GST law, we have two divergent legal provisions. One is about ISD, the other one is cross charge. So which route to follow? People will ask, sir, following cross charge is very difficult. I will do everything through ISD. Somebody may say, why I should take one more registration as an IST. I will do everything as cross charge. It's not optional. It is not just I will just choose either IST or cross charge, whichever is beneficial for me or whichever is easy for me. That is not possible. So we have to find out a legal solution how to deal with in all such cases. So we should try to find out some way out. Now, all this problem about this cross charge has become an issue, a national issue, after a decision of advance ruling in one famous case called Columbia Asia Hospital case. All of you may be aware. So the Columbia Hospital case was the first decision on the aspect of cross charge. It was, I think it is a Bangalore-based advance ruling authority. So here what happens? It's a hospital chain. It's an international hospital chain. They run hospital in almost 6 states. Their headquarters in Bangalore. Headquarters was situated in Bangalore. So they, whatever is the items procured from outside, they have not taken any IST registration. They have not obtained any IST registration. So what they did for rental, for auditor's bill, everything will come with the GST. The building, the head office is in here, rented. The landowner will give a GST invoice. Auditor will give a GST invoice to the headquarters. So what doing that India Management Office, IMO of Columbia Hospital, they will ETC credit. We will not examine whether that was right or wrong. I am only explaining the facts of the case. So what they were doing, they were taking ITC of all GST invoices in the head office. Then they have not taken any IST registration. They treated it as a cross charge. Any supply between distinct person is also a supply, even without consideration. So in turn, they will raise GST invoice. They will distribute that amount. Total rent amount will be distributed to all 6 states based on the turnover. They will raise an invoice. As if they have rented out building to the branch, they will raise one invoice. They will pay GST. This is the practice followed by Columbia Hospital. So they approached the advance ruling authority. They had a doubt. Wherever we are procuring services from outside, building, auditor, etc., we are taking ITC, raising GST invoice, no problem. But in headquarters, we have our employees. They are doing the work of the entire company. So all our branches are also benefited by the employees. We have common infrastructure, IT infrastructure we have common, which is being used by all our hospitals. Yeah, it's clear now?
Yes, sir.
So,
yes, sir.
Yeah. Now, so the headquarters is having their own employees. The headquarters has purchased the IT software. All these are used commonly by all the hospital. So is there any element of supply? Whether I am liable to pay GST or not on that particular transaction. So with that question, they approached the advance ruling authority. So their argument was, there is also one Schedule 3 under the GST Act. We all know that there is a Schedule 3. The Schedule 3 says there are certain transactions which will not be treated as a supply. Those transactions which are mentioned in Schedule 3 will not become a supply. So there is one particular entry, services provided by employee to employer. That is kept under Schedule 3. So services provided by employee to employer is under Schedule 3. It is not a supply. Otherwise, all salary income will be subjected to GST. Thank God. So services provided by employee to employer is in Schedule 3. So here all the employees of the headquarters, the distinct person, all these things are only for GST purpose. But the fact remains, Columbia Hospital is a single entity, a single PAN number, single balance sheet. So all these employees working in the headquarters are the employees of all the branches also. So they are providing the services in their capacity as an employee to the employer. So we feel that we need not charge GST, but we are already charging GST for other transactions, rental, auditing, all other outsourced services. We are taking credit and charging GST on our own hospital. But as far as the employee cost and IT infrastructure is concerned, we are not liable to pay any GST. So with this, they approached the advance ruling authority. So the advance ruling authority has held that Once you are deemed as a distinct person under GST law, for all practical purposes of that particular act, you will be treated as a distinct person. So what is the consequence? Once there are an employees of the headquarters, they are only employees of headquarters. They cannot become employees of other hospitals. So whatever salary you are paying to the employees are providing service to the head office. So the employees need to charge any GST. Please follow it very carefully. So the employees are appointed by the head office. The employees are providing service to the head office, and service by an employee to employer is not liable to GST. This is the first part. Next, the head office. The head office is a distinct person having GST registration. They have their own employees. With the help of those employees, you are catering to the of your all branches. So the headquarters is a distinct person. You are providing various support services to your branches. That is a distinct transaction. And your branch is not your employee. So they have distinguished, they have drawn a line of demarcation. The employee of headquarters is not a branch office. So employee of the head office is only employee of the head office. He is providing service to the head office. So no salary on the GST, on the salary income. Using that particular employees, when the head office is catering to the requirement of all the branches, the headquarters is providing service to branch office. So definitely there is an element of supply. Even though there is federation, it is liable to GST as per now. So the finding of the advance ruling authority. Now the party went on appeal to the appellate authority also. They made elaborate submissions. In fact, whatever they have missed out in the first, they have tried to catch up in the second round. In appellate, they have made detailed elaboration, relied upon various service tax case laws, where they went of employer and employee. They said all these distinct person and all, it is all only for GST purpose. But as an entity, I am one. And all the people of headquarters are the employees of the same entity. So it cannot be subjected to tax. There are other factors where I am procuring services from outside. So here they have made a plea. Actually, I should have followed. See, by mistake, they started paying tax. They should have followed IST route for rental, for auditor services and all. They should have followed the IST route, which would have been more proper. But they were paying tax. They are taking credit and paying tax on that. So now better sense prevailed. They argued before the appellate authority. They said, in fact, for the other expenditures also, I need not have paid GST. I could have very well distributed through the ISD mechanism. I have done a mistake. And these are all my employees, and they remain as the employee of the entire company. So on that basis, they made elaborate submissions. But unfortunately, the appellate authority has also upheld the findings. So they held regarding the second issue related to the performed, just a minute, activities performed by the employees at the corporate office in the course of or in relation to employment, the employees employed in the corporate office are providing services to the corporate office, and hence there is an employer-employee relationship only in the IMO. The other offices are distinct persons, and therefore the employees in the IMO have no employer-employee relationship with other offices. The services provided to the employer, that is to the corporate office by the persons employed with the corporate office, are in the nature of employee-employee relationship. Further, since the corporate office and the units are distinct persons under the Act, there is no such relationship between the employees of one distinct entity with another entity, at least as per the GST Act, even if they are belonging to the same legal entity. So that is how they have upheld the original authority's order, and that has become final. Now that they have filed a writ petition before the Karnataka High Court, and we have to wait for the outcome. So this particular, if at all, we have to cite any one particular decision of the advance ruling authority, which has created throughout the nation a debate. This is the one. And recently there was another thing about the remuneration paid to the directors. So like that, this is a very, very sensational decision by the advance ruling authority, which has created ripples throughout. So as of now, even though the advance ruling is binding only on that particular applicant, not on others. Still, we can take a different stand if it is possible. We can contest it. That is a different issue. But now, this is where the legal position stands interpreted as of now, as far as the cross charge is concerned. So, after this decision, there were a lot of uproar. People started worrying, what is this? How it is possible? It is going to, actually, it is very, very difficult. So, which one we have to follow the IST route? Which one we have to follow the cross charge? See, if there is a head office, not all services procured from outside will be with GST. The head office may procure some services without GST also. There may be some exempted service. They may procure services from an exempted person, below 20 lakhs person. They may procure goods also. They may purchase water, they may purchase various other stationery. So anything which is consumed in the head office, whether it is goods, services, exempted, taxable, everything becomes common. So wherever it is coming with GST, wherever it is a service, the head office is consuming some services which is coming with a GST invoice, they can follow the IST route. But the head office may receive services without GST. The head office may also consume various goods. Apart from that, the head office may have its own infrastructure cost, employee cost, electricity bill, IT infrastructure. So many other items are there. We can't even imagine. The head office will be incurring so much of expenditure. Now it becomes necessary to apportion. All these expenditure has to be apportioned to all the factories on some basis, based on turnover or any other reasonable basis. And the next question is, we have to issue a GST invoice. We will not get any money. It is not our sales or service. But still, for GST purpose, we have to raise a GST invoice. We have to charge the GST. 18% GST has to be charged. So, how to arrive at the value? That is the next question. So, the valuation becomes important question after this. Now, we have to value that particular transaction. So we also had sessions, in fact, 2 sessions on valuation, very detailed by Aparna Madam and Raghavan. So we have seen how the transactions between a related person and distinct person has to be valued. The rule 28 is the relevant rule. It says, if there is an open market value, you go to open market value. If open market value is not available, you go to like kind and quantity, like kind and quality. So here what happens? Finding out an open market value or a like kind of quality and all, it becomes very difficult. These are all highly subjective. People can argue this is different. My employees are better than their employees, or my employees are worse than other employees. All these are highly subjective, highly litigation prone. But there is one particular provision. We saw that in the second provision that will be very much helpful in this particular case of cross charge. The second provision to Rule 28 says, we had an elaborate discussion by Mr. Raghavan on the second provision, and there is one important decision of Advanced Ruling Authority, Appellate Authority, specs makers. So the second provision says, it's an option. If the recipient is eligible to take full ITC, you have to note the word full input tax credit, then whatever value you put it in the invoice will be market value. It will be accepted. This is one of the salutary provision under the GST law. Earlier, under the excise law, the related person valuation was always complicated. Rule 8, Rule 9, cost plus 10%, all those complications were there. But they have realized one very, very, very salutary provision. If the recipient is going to take credit, why should we break our head on valuation? Let them adopt whatever value. You can put even 1 rupee. It is legally permissible. People may ask, sir, can I put only 1 rupee for so much of services and goods? It is possible. Legally, if the recipient is eligible to take ITC, even if we put a nominal value, it may raise the eyebrow. The departmental audit officers may question, but legally it is permitted, provided the recipient is eligible to take full ITC. So now here the problem comes. So when the recipient will be eligible to take full ITC, coming back to our cross charge, the headquarters has incurred a lot of expenditure. We have to apportion it. We don't know how to total, what is the ratio to be followed. All these things are very, very complicated. We will not go into all those things. I will put some nominal value. Is it possible? I will put 1,000 rupees per month. All head office common expenditure, I am raising one GST invoice, 1,000 rupees value or 10,000 rupees value, nominal value. Is it permissible? it is permissible. The receiving unit, the branches are eligible to take full input tax credit. Full input tax credit means this is also an issue where we have to find a solution. Now, there is one rule, Rule 42 under GST, which we are yet to cover, ITC we are yet to cover. If somebody is affecting both taxable supply and exempt supply, then credit will be available only proportionately. The earlier rule 6 of the Senvan credit rules, now it is 42 of CGST rules. So, these are all services. We are talking about the head office providing services to the branches. The head office is providing service to the branches. Let us take a manufacturing example. It's a factory in several states. The head office is in one particular place. They have to do cross charge as per law. They want to adopt a nominal value for all services. You call A to Z, all services put together, 10,000 rupees nominal value if the recipient is eligible to take ITC. Now, if you go to the recipient, that is the factory is manufacturing and supplying several products. All the products are liable to GST. Or the branches are also providing some services and all services are taxable. Then there is no problem. The receiving unit will be eligible to take full ITC. So at the head office level, we can even follow a nominal value. We need not break our head. What is the value? For accounting purpose, we have to do common apportionment. That's a different issue. But for GST purpose, even a nominal value can be put as per second provision. But if the receiving end, they are also manufacturing one exempted product or they are providing one exempted service, then they are not eligible to take full ITC. Rule 42 will come into picture. They will get only proportionate credit. So whether Rule 42, if it is applicable at the receiving end, will it be hit by the second provision is an issue which we have to decide. If we read the provision, they should have mentioned input tax credit. They have not mentioned merely input tax credit. They have added an adjective to it, full input tax credit. So the intention seems to be, if the receiving unit is under Rule 42, if they are into any exempt supply, then we cannot take the benefit under second provision. We have to do valuation. What is the open market value? Nobody can say. What we can say is, whatever is the apportionment we are doing. See, we have procured all this. All these expenditure, open market value is not there. We are not providing same service to any other person. The head office is not providing the similar service to an unrelated person. So open market value is not possible. If you go to like kind and quality, we have procured all these services for a particular price. At the head office level, we have purchased all these services and goods at a particular price. That is the value of like goods and kind and quality. So the same cost we can take. That is one particular safe method, cost plus 10%. Let us not worry. We will add 10% also. Cost plus 10%, we will adopt the value. So these are all the options available for valuation. So now we have seen what is cross charge all about. Any supply between distinct person, that is separate registrations, is applied even though in the absence of consideration. GST has to be paid. So when goods are transferred from one registration to another registration, it becomes supply. GST has to be paid, no problem. But when one registered person is providing services to another registered person, that is where the problem comes. That also is treated as a supply. It gives rise to a cross charge on which GST becomes payable. The next question is about valuation, and then we have to issue a GST invoice. The receiving unit has to take credit. So on all these aspects, which will come under ITC, which will come under cross charge, how to value. So these are all the potential areas. Definitely, this is going to be one of the very major litigating point for future. Now, after this Columbia judgment, board, the council, GST council has also taken cognizance of it. They also held a detailed discussions in their meeting, and in fact, they have prepared one circular also. One draft circular was prepared by the GST council, but till now they have not issued. The meeting was held somewhere in June 2019, but still, yeah, that circular is available in the minutes of the 35th GST council meeting. In the GST council's 35th council meeting minutes, the draft circular is available. So this is the picture from that particular draft circular. We will try to see, this is our view. Cross charge, ISD, this is what our view, rather in fact we can say my view. Some people may not agree also. But what the government thinks, what the GST council thinks, that is coming out through this draft circular. What they say, there is one head office, there are two branches, branch 1, branch 2. Input services procured by HO, IS1, that is like the security services are commonly procured by the headquarters. The all security agency for branch 1, branch 2, head office, everything is procured by head office, that is called IS1. And the head office is also providing, its own service, employee, IT infrastructure to the branches. That is called service generated in head office, C1, C1. So you can see in the chart, the head office is once procuring services from outside, commonly. The head office itself is providing services to the branches, that is C1. First one is IS1, this is C1, C1. And between the branches, branch 2 needs some employee support. The branch 1 is giving employee to branch 2, that is called B2. So like this, there are various transactions. So how to deal with all these cases? So this is contained in the draft circular. This is the government's view. We have to read and understand. I'll just read it and then explain. Is it mandatory to distribute, just a minute. Is it mandatory to distribute input tax credit in respect of input services IS1 procured by HO but attributable to both HO and BO following ISD procedure? Yes, it is mandatory to follow ISD procedure laid down in section 20, read with rule 39 for distribution of ITC in respect of input service. So what they say, what they are going to say rather, if outside services are procured, it should be done only through ISD. So what Columbia Hospital was doing was wrong. So if you are procuring services from outside, where there is a GST element, you need not raise an invoice for that again. Once again, cross charge will not apply. Please understand, accounting cross charge is different. GST cross charge will not apply. You can follow the ISD route and distribute the credit. But we may also have exempted services without GST. We may also receive goods also. So that has to be done through. So the first clarification is, so services procured from outside, which comes with GST, that should be distributed by the head office through input service distributor model. This is the first clarification. Second, will the input service procured by HO from a third party for use by BO, the ITC of which is distributed in accordance with the ISD procedure, be treated as a supply by HO to BO, and will it be taxable? So what we have covered under ISD, can it again be considered as supply of service? You have procured security service and provided security service. You have agreed to provide, so whether the department can turn around. If I have followed ISD procedure, can the department say ISD is not correct, you should have done cross charge? This clarification is no. The services procured by head office from third party for use at head office and branch office or exclusively for use by branch office, the ITC of which is distributed in accordance with the ISD procedure under section 20 would not be separately treated as a supply. So wherever ISD is applicable, we have to follow only ISD route. That cannot be treated as a cross charge. This is the second clarification. The third clarification is, if HO considers procurement, distribution, management of common input services for use by HO, the HO is doing all these expenditure. They are doing a lot of coordination activities. They incur expenditure. So how to treat that? The HO may incur certain expenses on procurement, distribution, management of common ITC. The HO may or may not apportion and recover such expenses from BO. Nevertheless, such procurement, distribution, management of services by the HO is a separate service provided by HO to BO to the extent of expenses incurred by the HO. So, whatever is the expenditure incurred in procuring the services, the cost incurred by the HO, it has to be treated as a cross charge. GST should be charged on that. This is the third clarification. The fourth one, the HO generates some services internally, such as common administration, by maintaining common administration team for BO and HO, or common IT maintenance through a maintenance platform. So again, this is also similar to point 3, a common IT team. a common software, whether that will be treated as supply of service. Yes, it will be treated as a supply of service. So that should be under the route, cross-charge route we have to follow for all head office expenses. Then, what is the legal basis for concluding that HO is providing services to BO in the given example? So they are explaining HO and BO are distinct persons in terms of subsection 4 of section 25. They are also related persons as defined under section 15. It may be noted that supply of goods or services are both between related and so this is what we have seen in the beginning of the session. So this is the legal basis. Even though it is part of the same entity, they are treated as a distinct person, and any supply between distinct person, even without consideration, will become a supply as per schedule 1. That is the legal basis for all these transactions. The next question, how would these services provided by one entity to another entity should be valued? So they are again going back to rule 28, open market value or like kind and quality, and if full ITC is eligible, even a nominal value can be put. Whatever we put in the invoice, that will be accepted as the value if the recipient is eligible to take credit. So the same clarification is there in the draft circular also. They are also giving an example. Suppose you'll see this HO has sent an annual expenditure budget of 10 lakh for the administrative division, looking after the personal administration of the employees in HO as well as 2 BOs located in 2 different states. The value of services supplied with the HO to BO may be determined under Rule 31 by using any reasonable means. They are not directly going to Rule 28, they are going to Rule 31. By any reasonable means consistent with the principles of valuation. Now, value will be Y divided by N into 10 lakhs. 10 lakhs is the total expenditure incurred by that particular head office. Y is the number of employees in branch 1. So this is related to employment. So employee cost. So they are apportioning it on the basis of number of employees. Y is the number of employees in branch. N is the total employees. So on that basis, it can be apportioned. Next question. If there is an input service clearly attributable to a BO, be contracted by HO and paid C, ISD will apply for common services. The chartered accountant giving a bill for ISD, head office, it has to be distributed to all branches. So sometimes what will happen for various administrative purposes, even specific service of a branch can be sourced with the head office. One particular factory, it is there in Jammu. So now Jammu Kashmir is part of GST law. We also have a branch in Jammu Kashmir. Let us assume we have to appoint one security agency. But that particular factory wants a separate agency locally. They don't want headquarters help, they want. But payment will go from head office. That particular invoice will come to head office only. Can that also be distributed through ISD? Yes. That particular service pertains only to one branch. So the entire credit should be distributed only to Jammu Kashmir. This is what this clarification says. Next one. There are some services internally generated which are clearly identifiable, and those so specifically the head office may provide some service specifically to one particular branch that should follow the cross-charge model. They are also giving, these are all little long. I'll share the PPT also. Like that, they have given various clarifications in a draft circular, but still this circular has not been issued finally. Still it is only in the draft stage. So what is the way forward? After understanding what is cross-charge, after knowing the complications involved, so what we have to do, or rather what we have to advise our clients. See, common service procured by head office with the GST to be distributed under IST model. Wherever the head office is getting a GST invoice for services, that can be distributed through IST. Again, I'm saying IST and cross-charge are not mutually exclusive. It is not an option. Whatever is easier, I will follow this. No, it is not possible. As per this draft circular, and as well as based on the legal provisions and correct interpretation, wherever the services are procured from a third party, following IST route is important. Common services procured by head office without GST, that should be cross-charge. We have to do a cross-charge. Other common expenses incurred in head office, employee cost, goods consumed, infrastructure, IT, everything should be cross-charged to branches with G invoice. If the recipient is eligible for full credit, we can even adopt a nominal value. We need not do any proper apportionment valuation and all. Even a nominal value can be put if the recipient is eligible to take full credit. If the recipient is not eligible to take full credit, then we have to do proper valuation based on open market value or like, kind and quality, etc. Now, after all this, a simple question comes to me. Are we trying to cut our foot to fit the shoe? See, the law has been enacted. A simple thing could have been this cross charge. It was not taxed under service tax regime, because the definition of service contemplated there should be a consideration. If there is no consideration, no service. It is not taxable. This is something, a product of GST. This is an invention of GST. So it is very much required as far as goods are concerned. So definitely, to maintain the ITC chain, stock transfer also should be made liable to GST. No doubt about it. But why to place services also? Simply done in Schedule 1, one small amendment. The word services may be removed. The Schedule 1, serial number 2, just to remove the word services. No problem. You are not going to lose any revenue. Most of the cases, ITC is going to be taken. And this is not a case which was taxed under the old law, which we don't want to forego. No, it was not taxed under the old law also. Then why all this confusion? Are changing Schedule 2 will involve amendment to the statute. Parliament has to pass. All the state has to pass the legislation. It is little difficult. Simple. We can give an exemption notification. Any services provided by distinct person, one distinct person to another distinct related person, we can keep it. Related person means distinct entities. Company A and company B, distinct entities. Still they can be related person. We have to pay the tax. We don't have any quarrel over that. But between same entity, what is the need for creating all this confusion? Just because Schedule 2 has been, services have also been included in Schedule 2, knowingly or unknowingly, should we cut our foot to fit the shoe whichever we have bought? Why can't we just disregard that shoe and get a new shoe? That is my basic question. And through this lecture, I am posing this question to all of you and even to the government also, because definitely a lot of officers will also be seeing this session either today or later. So I am raising this basic question. Is that all needed? So much of confusion and so much of litigation, all that is needed. That is the biggest question which we have to think. By simply either amending Schedule 2 or by giving an exemption notification, all these things can be avoided. So with this, I am just completing my session as far as cross charge. Now, whoever wants to raise any question, you can raise your hand in the app and Prithvi will mute. Thank you.